Hi, this is Zach here with a pre-market edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 29th of January. Starting off with the FTSE 100, which is still within this rising trend channel, the black channel there, heading for 87.20. We had a bit of a pullback with the Chinese chatbot incident at the beginning of the week, but 84.62 the low there, and that just neatly overlapped the old May resistance 84.74 before the market headed higher again. Can't rule out a dip towards 8400, which is basically post-May resistance for this market, but at least while we're above the old May resistance and we have a bit of wiggle room there, 87.20 the target here, ultimately looking for 9,000 by the end of Q1 2025, and judging that the current consolidation is a mid-move consolidation, and we could head up another 500 points or so, presumably driven by the government's growth policies. Moving on to the DAX, and here you can see that managed to hit the top of that red October rising trend channel there, around 21,500. Still looking for the top of the channel there, as high as 22,000 by the end of next month. I'm hoping that this market will stay above the 21,000 area, which is basically the floor of the latest gap, or the recent gap that we had, which we bounced off on yesterday's session. Worst case scenarios, we're going to head back towards 20,500, the floor of the October channel and the old December resistance, but at the moment looks as though we might get away with it. Moving along to the Dow, and here a reasonable performance in the sense that we're just approaching or reapproaching the best levels ever through 45,000, 45,100 or so, the peak that we had November, December, and really good, decent rebound from the chatbot sell-off that we had on Monday, bouncing above a rising 50-day line, and looking forward to potential move to 46,400 by the end of next month, which is the top of that rising March trend channel. Worst case at the moment would be the need for a test of the 50-day line there, 43,600 or so. Moving on to Bitcoin, which for some may be the most important market of the lot, and here we've had a bit of a range-bound situation between the 50-day line and the recent record highs, 108,000 plus. Looking for, obviously, a third test of the 108,000 plus area, while we're above the 50-day line there at just under 99,000. I suppose the exciting part here is that if there is any rug pull towards the 50-day line, that could be a buying opportunity, as it was for yesterday's session. Moving on to, or looking at the RSI, still above neutral 50, and so therefore regarding this market as being a buy on dips rather than a sell into strength, even though obviously we're at the top of the range at the moment. Moving on to the situation at gold, and here we can get the right market. We can see that we've got the market trying to find support basically at the old post-October resistance there, 27.50.60, and we've done that today. Above that, looking for at least another test of the 2800 area, the record highs of November, and then hoping that by the end of Q1, we'll head up to 29.70.80, which is the top of that rising trend channel from last February. On the downside, the worst case probably 27.20, which is the broken October resistance line, and then hopefully support would come in above the rising 50-day line just below it. Moving on to the stocks, and starting off with a stock which gave people a rather big kick in the teeth at the end of last year. Some signs that Atlas Metals is trying to regroup. That said, on the basis of the bounce off the floor of a rising trend channel base, rather sort of delicate rebound at the moment, and also a bit of bullish divergence, or at least an uptrend line in the RSI window, suggesting that there is some accumulation going on here just below the 10 pence level. Nice candle for Tuesday's session as well, opening at the low, closing at the high. So perhaps the best case scenario at the moment is we head up to 18 or 19 pence at the top of that channel by the end of next month. Obviously, we don't want to see any fresh lows below 8 pence for this market. In fact, the January support marginally higher than that 7.75 pence low that we had last month. Moving on to a stock which I haven't looked at for a while, and it is Empire Metals. Here you can see we've had a vertical move in recent sessions, and breaking not only the initial January resistance there at 8 pence, but also the 200-day line now rising at 7.5 pence. That's rising along with the 50-day line, so that suggests we're in the run-up to a golden cross and could easily hit the top of that broadening triangle there, and 2024 highs at 13.5 pence by the end of next month. The key here is that we stay above the post-summer 9 pence zone as we head higher for this market. So looking very encouraging indeed. Moving along to Gfinity, which has been looking encouraging since the end of November. We had an initial target there at 0.033, and second target basically hit around the 0.08 level. Through 0.08, looking for the shares to quite logically head up to 0.12 pence, which is the upper parallel of the second target there, and hoping for that by the end of next month. Good to see that the shares have managed to stay above the 50-day moving average, even on dips, since the last week of November. Moving on to a stock which doesn't get much coverage here or anywhere else, which is Hardide, but couldn't resist this bear trap island reversal, so gapping down there in October and gapping up in December. I think if I had to choose one setup to trade by, this would be the one. And we've got this sort of U-shaped turnaround here. We'll see a similar pattern in a stock later in the sequence, but end of day close above the December resistance at 6.5 pence, and we're looking at 9 pence hopefully by the end of next month. In fact, the whole pattern here is a bear trap island reversal, so gapping down there back in February, etc., etc. So it's a bear trap within a bear trap situation. Only back below the 50-day line at 5.25 pence, really delaying the upside scenario. Moving on to Immupharma, and here we're on to this from the time of the announcement on the 9th of January. There was obviously a rather, slightly painful pullback to old resistance, but that was also talked about and covered, and we bounced off the old 2.5 pence area to hit our big target there at 5.1 pence, and looking for now a fresh target as high as 8.6 pence by the end of next month. While we're above 5 pence, you can also see that the 50 and 200-day moving averages celebrated the latest rise with a golden cross today, and obviously the run-up to that golden cross was a good move for the shares. In fact, they more than doubled in the run-up to that. Another stock which doesn't get much coverage is Manolete. I think I spotted it a couple of days ago, but here we have a definitive break of that falling wedge in place in September and the 50-day line. 2 days with the open at the low, closing at the high, so it looks as though somebody's interested here. And at least while we're above December support there at 87 pence, looking for £1.20 by the end of next month. The gap to fill up to 130, which may be something that the optimists can shoot for, but it certainly looks as though something is happening there, if only keen accumulation. On to Microlise, which I looked at earlier today as well, but here you can see we've closed above the £1.14 resistance line there, up with a gap to the upside, and looking for the shares to head up towards £1.38 by the end of next month. A stock which has one of the best charts around and one of the nicest CEOs around as well, Ondo InsurTech, is next, and here you can see this very steep rising trend channel in place since October. There's a resistance line to break there at basically at 40 pence, the red line there, and above that looking for the top of that rising trend channel from October. That's currently heading towards I suppose the upper 50s, might even get up to 60 pence by the end of next month if we have a swift breakout through that 40 pence level. Maybe more contract news for that company coming up. Stock which I haven't looked at for quite a while is Renold, and here another trend line break. You could argue exactly where that trend line is, but even on the highest iteration of that trend line, we've broken through that at 53 pence, and the 200-day moving average just above that. That's rising at the moment, and end of day close above a rising 200-day line was important. That suggests that we're going to 70 pence by the end of next month, while we remain above the 50-day line at 48 pence. So nice looking setup there. The other point to note is we've had double, triple bounces off the RSI 50 level over recent days. So that was already flagging that this could be heading higher. And the other point to note is that the next time the 50-day line crosses with the 200-day line, it will be a golden cross, or should be, and that is something which should add extra momentum. There have been dozens of false dawns in United Oil and Gas, but maybe this time is the real turnaround for the shares. Here you can see that we've got a potential rising trend channel base, top of the channel there at 0.16 pence, and also got a W-shaped turnaround here for the shares, and above the recent neckline resistance at 0.1 pence, looking for 0.16 over the next couple of weeks. Obviously, there's a gap to fill up to 0.19 for the optimists to shoot for. Ideally, we stay on the right side of 0.1 pence in the meantime. On to a stock which was asked for, which is rather unusual, earlier today, and here you can see that TheraCryf, which has been basically trying to rebound over the last few weeks, TheraCryf rather, and here you can see a U-shaped turnaround. We've hit our first target there at 1 pence, above 1 pence, which we've managed to do, looking for up to 1.5 pence, which is the upper parallel of that broadening triangle in place since back in February. On to the last two. The first one is Wicks, which is rather bigger in terms of its market cap than the type of stocks that I normally look at. But here we can see that the shares made good on their trading update today, nearly at the top of the, basically at the top of the range, nearly at the top of that rising trend channel, £1.80. Above that, looking for a fresh leg to the upside as high as £2.15, which is the upper parallel of that rising trend channel from October 2023. Finishing off with the stock which just keeps on rising at the moment, which is Zenith Energy, and here you can see that we've hit various targets, first, second and third target. The difficult one, I suppose, was 6 pence, but now that we're above 6 pence, we're looking for the shares to hit 9.6 pence, hopefully by the end of this month, actually, or at the end of this week, given the current rate of progress. If you're a fan of the shares and looking for greater glory, then that would be obviously up to the old 7-8 year resistance, 2017 2018, towards 13 pence. So a very significant turnaround there for the shares. Upside value while we hold above at least the 6 pence area. That's it for me today. More updates in the normal way on Thursday.